You're listening to Indications by the Conference Board.
Hello, welcome to this episode of Indications, our podcast series at the Conference Board on the latest development in economic data. My name is Bart van Ark. I'm Chief Economist at the Conference Board. And today I'm joined by my colleague Lynn Franco, who's our Senior Director for Economic Indicators, to talk about one of our latest indicators, which is our CEO confidence measure, which was just released last week and which provides us with some insights on the confidence of CEOs in the third quarter for 2020. So it's really, giving us a little bit of an idea about how CEOs think now that, the recovery is somewhat underway, but only somewhat. So we'd like to see how they're thinking about the outlook for the economy. There's something special about this index. We've been doing this index for several decades now, but this is the first time that we're actually doing this in collaboration with the Business Council. This really is a group of business leaders of the largest global companies headquartered in the United States. It gives us a more stable panel that we can now continue to survey on a quarterly basis. So it's really good to have this collaboration. And we'll come back to that a little bit later in this podcast. But first of all, Lynn, I'd just like to talk about the results, of course. What is the measure of CEO confidence showing us in quarter three, and how does that compare to quarter two?
Well, we had a slight uptick in quarter three. The reading is now at 45, up from 44. But I think the real story is sort of in the underlying components that make up the measure, where we take a look at expectations for the economy and for CEOs-owned industries, in addition to how they rate current economic conditions and industry conditions. And there we've got quite a different story. What we're seeing is that, CEOs' assessment of current conditions has improved. That's no real surprise, and that's really been driven by the reopening of the economy. Yet their expectations looking ahead sort of retreated this quarter, and that's, I think, in part because we've seen that, the reopening has not gone very well in a variety of states across the U.S., and there's just some uncertainty about the economic outlook.
Yeah, and just to be clear, the index, as you said, is 45, which means that if it's below 50, we have sort of more negative sentiment than positive sentiment among CEOs. And just if we take that in a little bit of a longer term perspective, it was above 50 sort of in the course of 2018, but it has dropped below 15 already in 2019, right? So maybe you can give us a little bit of the history of this, why it was already weak in 2019, and obviously it weakened enormously in the beginning of this year when COVID-19 hit.
Right. It's been 2 years. We've got to go back to Q3 to see where the measure was above 50. Back then it was at 63. So it's been somewhat of a decline. Actually, it was 55 in Q3, 63 in Q2. And a lot of it,
2018 that was.
Yes, of 2018. So we haven't had much of a positive outlook since that time. And it's just been sort of a variety of measures. One aspect that we saw that really impacted CEO confidence was any sort of increase in trade war rhetoric or change in policy that created a great sense of uncertainty. And that sort of was the beginning of when we began to see a decline in CEO confidence. And then it really plummeted, post-COVID. We sort of plummeted down to 36 in Q1. We did a quick follow-up survey, and CEO confidence fell even further in Q1 to 34. So we are better off than we were, let's say, back in the early pandemic days, but we still have a long ways to go before we see confidence improve.
Yeah, but indeed, it's been more than 2 years now that sentiment among business leaders is more negative than positive. And as you said, it obviously completely plummeted in the beginning of this year. Current economic conditions, so just assessment of current business conditions, it even dropped off to number 2 out of 100 in the second quarter, which is, you can't go lower than that. We're now back to 13. So even today, the assessment of current conditions among CEOs is still quite weak.
Absolutely. And even if you take a look at their assessment of conditions in their own industry, where they're quote unquote a little more positive, I mean, that's risen from 19 in Q2 to 25 in Q3. So while we have seen an improvement, we're nowhere near positive territory at the moment.
So this is obviously not a great outlook. The good thing of this sort of revamp of the survey that we've done now is that in addition to the measure itself, we've been asking some additional questions. Four, actually: a question about employment, a question about the hiring of qualified people, a question about wages, and about capital spending. Can you take us through a little bit on sort of what additional insights that gives us about why CEOs are not so confident about the recovery ahead?
Well, I think these, especially the employment questions, are quite interesting. It wasn't too long ago that we were very focused on labor shortages. We were having tremendous issues finding and hiring qualified people. There was wage pressures. There was plans to expand the labor force, and it's a much different employment landscape these days. So when we take a look at hiring intentions over the next 12 months, 38% of CEOs say that they expect to reduce their workforce. Hiring qualified people, now nearly 2/3 say this is no longer an issue, and they anticipate very little, if any, problems over the next 12 months in being able to fill those open slots with qualified people. And, as for wages, just 50% say they're going to increase wages by less than 3%. So we're no longer sort of feeling the wage pressures or the labor shortage pressures that we were at the onset of this year. And on top of that, if you take a look at sort of, the somewhat lackluster economic outlook, that's also having an impact on capital spending plans. So we've got 37% of CEOs saying that they intend to trim their capital spending budgets by 10% or more over the next 12 months, and an additional 18% saying they plan to spend it a little less than 10%. So there are some potentially big cuts coming in terms of capital spending. And I think just this speaks to the cautiousness that we're seeing in other measures here in the CEO confidence.
Yeah, and Lynn, do we have any idea about how this sort of splits up between industries and sectors? Do you have any impression of that in the underlying data or not?
Well, I think we can see from other work that we've done that, not every industry has been impacted by COVID the same. So those in sort of, hospitality, entertainment, and travel are bearing the brunt of the impact of COVID, whereas technology companies are faring a bit better.
Yeah. And that, of course, again, I think in going forward, which as the impact of the recession is gradually spreading across the economy. I mean, we're seeing this sort of short-term recovery, but in the recovery, we'll see that more and more sectors, even the ones that were not directly impacted by the lockdown and the shutdowns, will actually see some impact later on. So it's pretty broad-based still in terms of the negative sentiment across the business community.
Right. And what's interesting too is this is sort of mirroring what we're seeing in our consumer confidence survey, where it's really the present situation component that's driving improvements, and people are still weary about the economic outlook. So I think usually we see a difference between sort of consumers and business leaders, but this time they seem to be in sync.
Yeah, it's interesting, the pattern, right? So in Q2, when we surveyed, it was like, both consumers and businesses say, look, it can only get better as where we are right now. I mean, the economy was just in such deep trouble that it could only get better. But now that we're in Q3, the expectations are actually beginning to be tempered. And we've seen that both with the consumers as well as with business community. And that's actually quite an interesting outcome. Let's talk a little bit about the impacts that this has on our economic outlook in a minute. But before we do that, we're going to take a short break with some announcements, and we'll be back with you right away.
Can you Your team or your company benefit from insights such as the ones provided in this podcast? They are immediately available when you join the Conference Board, a membership-based think tank that delivers trusted insights for what's ahead. Reaching across industries and geographies, we bring together our noted experts, senior executives from the world's largest companies, and nonpartisan practical research to help you address your most important business issues. Our membership packages are tailored to your organization's unique needs and budget. To learn more about our offerings, go to www.conferenceboard.org and click Join on the top bar to connect with one of our product specialists.
Welcome back to discuss our CEO confidence measure for the third quarter of 2020. I'm Bart van Ark, Chief Economist at the Conference Board, joined by my colleague Lynn Franco, Senior Director, Economic Indicators. Lynn, we just talked about the sort of weak outlook by CEOs in going forward. Index still 45, which is less than 50, so more negative CEOs than positive as far as the outlook is concerned. What does this mean for our economic outlook, and what does it mean for our economic forecast? We've been talking about this sort of V-shaped recovery, and we've seen some of that happening in May and June when companies were coming back and opening up again, and we saw a pretty sharp recovery. But then it's sort of there's some signs that it has started to level off, of course, with the resurgence of cases across large parts of the United States, but also elsewhere in the world. That obviously plays a big role. But how would you interpret the outcome of the index for the economic outlook?
I think it speaks to a cautious outlook, right? I think that, V-shaped recovery where we would quickly rebound and be at sort of pre-pandemic levels before year end has somewhat faded. So I think CEOs are expecting a much slower and longer recovery period, which is very likely to extend well into 2021.
Yeah, absolutely. And I think pretty much not just, these are all global companies that we are serving here. So, they're not primarily or not only dependent on the United States. Many of them have major global markets. And I think this is really translated around sort of weak global growth around the world, right?
Absolutely. And I think that's, the benefit of having this collaboration with the Business Council, because these are CEOs of the world's largest multinational corporations across all industry sectors. So I think this gives us a good read on, the pulse of CEOs.
Yeah. You already talked a little earlier about the question that we ask about employment, and quite a few CEOs foresee that their workforce will not grow very rapidly or even shrink. So what does that mean for the unemployment rate?
I think there too we're going to see it somewhat above double digits for quite some time, while we've had, I think, fewer unemployment claims. We don't feel really that, the employment hardship is behind us at this moment. I think as we go forward, there'll be several challenges. As we know, the benefits have run out, so this could cause further hardship and could impact spending as well as employment down the road.
Yeah, I think our forecast for unemployment is that it will remain elevated above 10% into 2021. And then obviously depending on, where we're going to go next with the virus itself and, the extent to which additional lockdown measures are required, it might either come down or continue to be very elevated in going forward. So this is really going to be a difficult period ahead of us. Do you see any bright spots in the index for the outlook? Is there anything where you say, look, this is important to watch because those are the first things that you would see in confidence indexes in order to become a bit more positive?
Well, I think, expectations, even though they have retreated a bit, they're positive. So maybe the key takeaway is that while it will be a slow and perhaps sluggish recovery, there sort of is a light at the end of the tunnel. And so I think CEOs still remain maybe optimistic that while it may take us 12 months to pull out, that 3 years down the road, because we also ask them their expectations, 3 years ahead, they're much more positive. So it seems to be that I think sentiment is that we're in for a bit of a long haul, but there will come a point where we sort of kind of return to pre-pandemic levels of growth.
Yeah, I was interested to see the difference between the 3-year outlook and the 12-month outlook. So you see the numbers go up, but it's modest though, right? I mean, yes, the number of the percentage of responses saying we're seeing a net reduction in workforce is going down from 38% for the next 12 months to 19% for the next 3 years, but still 19%. So it's still a fairly large number. But, when you look at investment, for example, yes, it's going up a little bit for the next 3 years, but still, 11% may say that over the next 3 years, they will cut it by more than 10%. 21% will say they will cut it being at less than 10%, and 45% are not changing their capital spending plans. So it really is a long haul. And I think investment is important because that is driving technological change, that's driving innovation, that's driving productivity growth and those kind of things. So it really is it's an important factor to look at. It seems to me that, Linda, probably the most important thing that needs to happen is that there has to be a feeling that this COVID-19 crisis, which is obviously not going to go away overnight, we all know that it gets better managed, right? That there is a way for companies to be able to see how can we operate in this environment, which probably is a combination of behaviors by the workforce, by your consumers, by your customers. It is by sort of medical treatment and therapeutic measures, as well as a vaccine. So how important do you think this sort of management of the COVID-19 crisis is going to play a role here?
I think it's very critical because I think it's contributing to the degree of uncertainty. And we've seen, both consumers and CEOs, when they're very uncertain, they tend to, pull back in terms of spending. Maybe we've seen it a little less so in retail, in consumers. But again, now that we've got sort of, fewer getting unemployment benefits, we could see a pullback in consumer spending. And we're seeing it in terms of capital spending for CEOs. The degree of uncertainty is making them cautious and unwilling to make large commitments. So until we have the pandemic under control and perhaps a course charted forward, I think we'll continue to see a bit of a cautious optimism among CEOs.
The other big uncertainty is the outcome of the U.S. election. The election campaigns are heating up right now, and so this will become a much bigger prominence in the news for the next few months than has been the case in the previous months when COVID-19 and also, of course, the racial inequality issues were really dominating the media. In the next few months, I think the presidential elections are going to be quite important. Now, obviously, it's a little bit too early to read anything in the index as far as CEO sentiment with regard to the elections is concerned. But what do CEOs typically look at when it comes to the impact of a presidential election on their confidence?
Well, one thing that we've seen in the past that's always been sort of at the top of the chart is, any implications in terms of regulations. That always seems to be a key point. So I think, they'll probably be looking at that as well. But I think here now, probably COVID will be front and center. Just having some plan to move forward and get past the pandemic, I think, is critical for all of these leaders, not only in the U.S. but globally as well.
Yeah, and I think and you already see that, of course, in the election debates, that how that crisis is being managed from a government perspective is probably an important factor that business leaders will also look at, because that will determine very much the path forward. Yeah, so Lynn, let's go back finally to wrap up with our collaboration with the Business Council, which it's a group of about 200 CEOs of the largest US companies, all global companies, or at least almost all of them are global companies. And this is the first time that we really do this in collaboration with the Business Council. Why is this so important from the perspective of the quality of the index?
Well, I think right now CEO confidence is critical. And having a measure now that is comprised of CEOs from the world's largest multinational corporations across all industry sectors gives us a good read on CEO sentiment. It helps inform our outlook on employment, both in terms of the ability to hire, wages, and just an overall labor market indicator, and also capital spending plans, which we know tend to lead economic activity. So I think this really has enhanced our CEO confidence survey, for which we have, as you mentioned before, decades-long history.
Yeah, I much agree with that. I think it's important also then to realize that this is really, the sentiment around some of the largest businesses in the U.S. And I think in the light of the COVID-19 crisis, that is important because in first instance, the shutdown particularly hit smaller and medium-sized businesses, many of them who, basically had to shut down entirely. Larger companies could hold out for a bit longer, but I think, as the crisis is gradually spreading and lengthening over time, the response of these larger businesses is really going to be important for the sort of medium, longer term economic outlook. So I think it's quite important to look also through the lens of large business versus small and medium sized business, which is not that clearly represented here. But I just give us a clear perspective on how to go forward. Okay, this is great, Lynn. Thank you so much for joining today to discuss the Conference Board CEO confidence measure for the third quarter of 2020. Please go to our website, conferenceboard.org, to find the latest information around this. If you enjoy this podcast as part of our indications program or any other programs that we do at the Conference Board, then please go to your favorite podcast platform where we are streaming all those podcasts, or go to our website, conference-board.org. Let me say it the right way, conference-board.org, to find our latest episodes in our various podcast programs. Thank you for joining Indications today. My name is Bart van Ark, Chief Economist at the Conference Board.
This has been Indications from the Conference Board.